Good afternoon and welcome to HYCM's webinar, FX Week Ahead, live market analysis with myself, Charles Cochran. I hope you're all doing well, guys. Let me just say hello as you're coming in. Let's see who we've got here. Hi, Mark. This is your first time, I think. Good to have you on board. Hi, Van. Good to have you back, as always. And yeah, I hope we can have a good session. We've got such a busy week this week. It's full of data. It's a very data-rich week. So we're going to get on with the half an hour that we've got so that we cover as much as we possibly can. Just to make it clear, as we're going through different, trade setups, different technical areas to enter different currency pairs, none of this is advice to trade. So the whole idea of these webinars and workshops that we do, it's all about giving you guys a framework within which to make your own trading decisions. It's all about education so that you are being educated in how to make trading decisions for yourself, just to make that clear. And we're looking at the week ahead. That's obviously what we do each Monday. So let's get going as folks are coming in. Hi, Nadir, good to have you. And don't forget, you can type in any questions you've got as you go along. I assume that you guys can hear me okay, and I hope I'm coming through clearly. Super. So, very busy week in the markets. Now, the highlight, the biggest scheduled event for the week is the Federal Reserve meeting. Now, that is taking place on Wednesday, and the situation with the Federal Reserve is this at present. At the moment, there's a 25 basis cut that's nearly 100% priced in for July. This rate cut has been expected for some time. The Federal Reserve has been turning dovish, and the market's been looking for this July rate meeting for quite some time. It's seen that there's definitely going to be a 25 basis point cut. That seems a reasonable expectation. There's also an outside chance of a 50 basis points rate cut, which is seen as around a 20% probability. But recently, there's been a whole slew of really strong US data. There's, jobs have been holding, inflation's been holding, retail sales have been holding. We've had and a really solid advance GDP that came out on Friday with a really good inflationary based consumer input figure of 4.3%. So the US economy is doing quite well. So at the moment, it seems overdone to expect a 50 basis point cut. That seems overdone. And now I was leaning towards a 50 basis point cut, but recently I just think no. I know it's the outside view, but I thought the Federal Reserve might be have more of a cut, to have more of an impact. But no, I think 25 basis points seems reasonable now, given the strength of the US economy. Don't forget the Fed Watch tool that you can use from the CME group, and they are pricing in as, it's a 23% chance now of a 50 basis point cut on Wednesday. So the way that helps us for trading is what we're looking for is the monetary policy statement from the Federal Reserve. And what the market's really focusing in is, will the Federal Reserve expect further rate cuts in the medium-term horizon, or will they say, look, this hike is, this cut is an insurance cut, it's just one cut against a slowing local and global economy, we're not expecting any more, in which case we're going to see some dollar strength come in immediately after the Federal Reserve meeting, okay? So be aware, if the Federal Reserve say, yes, we cut 25 basis points and we're looking at more cuts because we're concerned about global growth, and although the US economy seems to be holding up, we've got some concerns about different areas, then in that case, say they're more dovish, we're going to see a weaker US dollar, okay? However, if they just say one rate cut, that's it, that's one, and we're not so sure that we're going to, we'll be data dependent going forward, that's going to be strong for the US dollar. So do your homework, get prepared for that event on Wednesday, and there could be an opportunity to enter at market prices depending on the forward guidance. It's going to be a volatile event, and obviously the market's trying to get fresh direction, fresh impetus from it. Now, the other thing we've been seeing at the start of this week is the pound's been selling off quite heavily on the chance of a no-deal Brexit increasing. So the UK government, they've been communicating over the weekend that it's preparing for a no-deal Brexit, as the EU have said they won't renegotiate the withdrawal agreement. Now, recently in the UK, there's been a hardening of the UK government. The UK Conservative government is now being led by Boris Johnson. He has said famously, it's do or die. We're leaving on the 31st of October, or, you know, that's it, bottom line. So we're seeing the pound starting to sell off because the Conservative Party have been rising in the Tory polls now. They're gaining more support because they've actually got a clear perspective on Brexit, which is we're determined to leave. That's attracting people from the Brexit Party. Now, the Brexit Party is led by Nigel Farage, and he was the leader of UKIP, which way back in 2015, he made the question for the UK about whether Britain stays in the EU or not. It was his party alone that forced David Cameron to bring that question to the country. And the UK decided they'd like to leave the European Union. Now, the chances of a no-deal Brexit are increasing, which is why we're seeing pound selling. If you've been looking at your charts, you've been seeing pound selling. So this morning session saw the following sentiment. Saw weak pound and strong US dollar. So that put the pound US dollar technicals in focus. So I'm just going to show you what the trade I took today. Now this will be helpful for some of you guys who are following the workshop on the Tuesday. You'll see how how we go about doing this. So I'm just going to take a screenshot because my profit target has just been hit as I've been on, just as I started the webinar. Actually, it was nice just to see the trade move off, and I'll just show that to you in a minute. First of all, I'll show you the technicals. Now, obviously, each Tuesday we do a workshop where we try to pair up weak currencies against strong currencies. So this morning we had a weak pound and we had a strong US dollar. So that was a pound US dollar potential short. That's what we were looking at. And this was the technicals. I'll show you, this is the pound. So I woke up this morning, analyzed the sentiment. And once the sentiment was analyzed, you could see that price broke through this weekly pivot point, the S2 pivot point, and price was moving down. It was around here, and I just put my stop 1.2423, just above that pivot point. Also, that daily support level that had been broken, very key level, and also the big round number 1.2400. So significant break. A continuation seemed likely, strengthening US dollar as the Federal Reserve rate cut is being dialed back to just 25 basis points, and it looked like more downside, and the pound dropped down to the pivot point, and I just put my take profit target just above the S3 pivot point here. Now I was expecting to hold this into Wednesday, maybe not hitting profit target, but in the end what happened was here. You can just see that my profit target has just been hit, and so I entered. That's my chart. So my stop was there, just about 1.2423, and I took profit at 1.2278. So I entered at 1.2366. So it's around 80 plus 90 points taken on that pound US dollar. You can see that the descending trend line was broken. I was looking at that on the 1 hour chart. Price briefly took support on that descending trend line, broke quickly and just broke down. So that is just a simple example of all the things that we use, and that's just a very simple example. That was just a trade that was taken today. Just show that for those of you guys who attend the workshop. So week ahead. So let's look at what we've got coming up for the coming week. Okay. Let's just see. We have got a lot. Oh, here we go. Just moving Excuse me, bit of hay fever. Just there we go. That's better. Let's see what we've got coming up this week. Now, there's not a whole lot of data out today, but we do have the US-China trade talks are going on. Now, a US delegation, including Lighthizer, the Treasury Secretary Mnuchin, and Chinese Vice Premier Liu, they're going to travel on Beijing on Tuesday for the very first face-to-face trade meetings between the two nations since about May. Okay, so the chances of a deal have been downplayed, and that's not really, people aren't expecting necessarily a deal. But what are both sides wanting? Well, the US wants structural change to the Chinese economy. They want American companies to be able to compete fairly, and they want China to enhance their kind of intellectual property protection and stop Chinese subsidies that have helped, the Chinese country overproduce steel and aluminium. And the US side has said they want the Chinese to eliminate certain requirements and policies to do with technology transfer. So it all focuses around technology for the US, whereas China wants the removal of all tariffs on Chinese goods immediately, and it wants the amount of goods it must purchase from the US to be realistic and market-based, and it's kind of demanding that its sovereignty and dignity to be preserved. So there's a battle going on. Just to be aware that these trade talks are starting. Again, if they go badly, then look at some potential safe haven currencies appreciating. So it's going to be things like, I just hope you can hear me. Can you guys hear me okay? I'm just got to, can you just let me know you can hear me? I've got some questions saying connecting to audio. Could someone just type in the questions to let you know that you can hear me? That would be appreciated. Yeah, okay, thanks, Nadir. That's great. Yeah, sorry, a little thing flagged up on my computer. I thought, I hope you can hear me. So just be aware of that. If the trade talks go badly, we're going to see yen and Swiss franc strength. Obviously, with so much Brexit concerns going on, pound yen shorts would be potentially making sense, and pound Swiss franc shorts you'd expect sellers on rallies to resistance for the pound Swiss franc. That's an interesting trade, even potentially for this afternoon. Again, not trading advice, it's just sort of things that I'm thinking about now I'm out of my pound US dollar shorts. We have the Bank of Japan meeting on Tuesday. Now, they're expected to keep the monetary policy statement, the interest rates unchanged. But some market participants are seeing a small probability of a rate cut. But some have said, well, they might wait and see what the Federal Reserve does, okay? And there's a lot of sense in that. Goldman Sachs are out saying that given that the Bank of Japan has limited options for additional quantitative easing, remember, quantitative easing will result in a country's currency losing value, okay? So if the Bank of Japan say we're going to add quantitative easing, we expect the yen to lose value, okay? So Goldman Sachs is saying they've got limited options for additional easing, so and the US dollar Japanese yen exchange rate is okay, it's not creating big headaches for the Bank of Japan, so there's no urgency to cut interest rates. But if they did take action at the next meeting, it would most likely, according to Goldman Sachs, come from extending the time frame in its forward guidance, which currently is pledging to maintain an ultra-low environment at least through spring 2020. So look for that date being pushed out, okay? So that's one to be aware of in trading the yen. You don't want to be trading the yen going into that report. It might provide some opportunities outside of the port, outside of the meeting, but just to be aware of the risks that are involved with that. And the press conference, again, is afterwards. So remember, you've always got to see these kind of high-level events as kind of one event. You've got the monetary policy statement and you've got the press conference. Often at the press conference, you can get a a central bank governor either highlighting, enhancing, sometimes contradicting what's been said in the monetary policy statement. So you must take them together. Press conference, it kind of has a rolling start in Japan. It's usually about sort of 3, 4, 5 GMT time, roughly. So it could be quite difficult to get the start of that. Okay, so on Wednesday, yes, we have the CPI data coming out for Australia and business confidence. Now, Both of the RBA and the RBNZ have been shifting to a more dovish stance. Now, the Reserve Bank of New Zealand, we're looking at about 2 rate cuts potentially being priced in for the end of this year. Business confidence has been historically a factor that's dragged on the RBNZ. So a very low business confidence figure, if you get another low reading, let's just have a look here, plus 50 is in expansion, below 50 is in contraction. So you can see these low readings have been depressing. Anything lower, again, will potentially result in New Zealand dollar weakness and will play into further rate cut expectations. In contrast, we have the Australian CPI data out. Now, the Australian dollar CPI data, the Reserve Bank of Australia has been having a more dovish stance, and recently Governor Powell has been moving the market to expect some rate cuts coming. So potentially an Australia US dollar trade was one that I was looking at last week to see if I could benefit from that, downturn that Governor Lowe has taken. So look for the CPI data. CPI data, if it's a low number, it means that you're more likely to get a rate cut. If it's a high number, you're more likely to get rate hikes. Okay, so another low reading here, a disappointing reading here, and 0.5% is expected, which would change the annual pace to 1.5% year on year from 1.3%. Now, the investment bank Westpac notes that the June quarter tends to be quite seasonally soft. There's fresh fruit and vegetable prices are expected to provide a drag. Housing costs are slightly softer. There's also a seasonal decline in pharmaceuticals, and auto prices are set to fall again. So we could see this figure disappoint, which would likely result in Australian dollar weakness out the back of it. So be aware of that. And we have GDP data out of Canada. Now, the Bank of Canada has been an unusual central bank. And the reason they've been unusual is because they've been one of the few major central banks, I think the only major central bank, in fact, that's been neutral. So the Canadian dollar has been quite bullish, but obviously you have to remember that oil is affected by, oil impacts the Canadian dollar very closely because of the amount of oil exports that the Canadian government have. When oil goes up, the Canadian dollar goes up. When oil prices go down, the Canadian dollar goes down. So you've got to remember that factor always when you're trading the CAD. However, the domestic data has been pretty solid for the Canadian dollar, and the Bank of Canada is maintaining a neutral outlook. The GDP figure will either confirm or begin to question that neutral outlook. So that is potentially a tradable event, just to be aware where the Bank of Canada currently are at the moment. The Federal Reserve meeting is the bell of the ball for this month. That's the major scheduled event that's expected. If we're expecting a rate cut to 2.25%, obviously if that rate cut is greater, that will at this stage be a surprise, and we will see US dollar weakness enter the market. If that rate cut is as expected, then it's all about the forward guidance. What did the Federal Reserve say? If they say we've cut one rate and now we're going back to being data dependent, we're happy with the US economy, then that's going to be a strong US dollar strength situation. If they say we've cut one rate and we might be still cutting in the future and a little bit more optimistic, then it's a little bit more status quo. Okay, so do your homework in advance, get yourself ready. What are the different scenarios? Because out of this event, I'm looking, potentially to take a potential at market position. In other words, I can trade at market because I have a sense of which direction the market is going in, and then you're looking to pair this with a weak or a stronger currency. So do your homework, get ready for the Federal Reserve. Chinese data on Thursday, important, taxing manufacturing PMI. Now, these weak PMI numbers recently out of China, sub 50, have been concerning market participants, saying, aha, this is the evidence for the slowdown in global growth that we need, and that would result in a risk off tone. We'd see yen strength Japanese strength, and we'd see Australian dollar weakness. Remember, Australia's economy is closely tied up with Chinese economy. What's bad for Australia, what's bad for China is bad for Australia. Australia has about 30% of their GDP made up from trade with China. So again, this is something to be aware of, as well as the US-China trade talk starting on Tuesday. Manufacturing PMIs will be important. Bank of England on Thursday. Now, I've told you there's been a shift in the UK. Boris Johnson has been a lot more direct in his Brexit negotiation and his approach. And as a result of his direct approach, we're looking at more likely for a no-deal Brexit out of the UK. Now, the Bank of England have been maintaining a kind of wait-and-see, approach. Some of the data out of the UK has been pretty good. We've had some wages holding up. We've had average 3-month wage growth, which has been very good. 3.4%. The last reading was wages are being underpinned. The labour market is doing good, and so if there wasn't Brexit, then you'd probably be seeing an interest rate hike from the UK. But because of Brexit, there isn't. So again, expect the Bank of England to remain on hold and just saying, well, Brexit is this great big cloud on the horizon. We can't see past it at the moment. So any deviation from that position will be important. And another aspect to be aware of, net short positions by institutional funds last month increased again from, I think, 76,000 short contracts to 79,000 short contracts on the COT report. Now, British pound shorts are at record levels, but they're being added to even now with, I got some reports out this morning that hedge funds are adding to their pound short positions. So what that means, if there's good Brexit news, if suddenly the EU say we're going to do a deal, or something comes out that's concrete, not rumoured, that's concrete, and is looking really good, then expect strong pound buying. Okay, as all those short or positions would be reversed. For me, that would be a kind of a position, a trade that you could enter in at market, knowing with conviction you're going to see some real pound strength going forward. And again, Bank of England governor speaking at 12:30. Now, we also have we have ISM manufacturing data coming out on Thursday. Okay. Now, some of this data has historically had people concerned about the US-China trade turbulence. So the regional Fed, these figures have rebounded through July. Let's have a look. We have had we had a dip, but we're expecting to rebound to 52. So the focus on this will be any new order components. Okay, so look for the new order components. People are trying to look at this manufacturing data to look for a slowdown in global growth. Okay, any slowdown that's beginning to drag on the US economy will drag on the US dollar. So just be aware of that in light of the Federal Reserve, because the Federal Reserve would have met. And of course, we got non-farm payroll, average hour earnings, and unemployment rate. Again, look at all these three as a whole. The average hourly earnings, that's how much are people earning? Is it going up? Is it going down? Non-farm employment change, how many people are in work? And unemployment rate, how many people are out of work? So if you get hourly earnings up, more jobs, and a lower unemployment rate, that would be the most bullish outcome. And obviously, if you've got average hourlies down, more jobs, and unemployment rate the same, you got to balance up the position. So for the US dollar, what kind of really looking for is you're looking for a scenario where all the situation lines up. So say you got a Federal Reserve that said we're one cut, we're now looking at just 125 basis point cut. We're looking at becoming data dependent. The US economy has been good, and then say you get a good ISM manufacturing PMI and good non-farm payrolls, then they would like to see a lot of dollar strength into the close. Okay, But if you get, we're data dependent, and then the manufacturing PMI is a miss, and non-farm payrolls are a miss, then you're going to get a much more muted response. So do your homework in advance so you know what's coming, and so you can take advantage of these. It's a data-rich week. There's so much going on. There is stuff on Tuesday, stuff on Wednesday, stuff potentially on Thursday, and things on Friday. So it's a real action-packed week, and obviously we've had the pound, which is still falling as I'm on this webinar. We're now at 1.2258. We're looking at moving down to the next support figure at 1.220 at this rate. So be aware of that. Okay, don't forget, guys, with your trading, if you need some one-to-one coaching, if you deposit $1,500 with HYCM, you get a 1-hour coaching session with myself. If you deposit $3,000, you get a 1-hour coaching session, 1-hour trading up follow review. If you deposit $10,000, you get a 2-hour session with me, 1-hour trading follow-up, and 1 week support with me going forward. This can be very helpful for you in developing your trading style and really focusing on the process of trading. Again, another thing that HYCM do, and it's very helpful, this is the online trading workshop. Just as I highlighted the trade that I took today on the pound US dollar, the process which I used to identify that, to use my entry, my stops, my take profits, I teach those educational principles at 1 o'clock to 2 o'clock GMT tomorrow. So we go it together and we look at what's been happening. We analyze market sentiment. What's the mood of the market? We're always looking to find a weak currency, and we're looking to find a strong currency, and we're looking to trade a weak currency against a strong currency together, because that's the way that we get to see the direction of the market. We want to know that the currencies are moving in opposite directions, because then we're most likely to get a successful trade. And it also means we can take advantage of wrong pricing. And when I say wrong pricing, what I mean by that is sometimes, the market moves for different reasons at different times. Some companies have to buy a currency just because they're needing to change money to pay their employees. Some companies every day are buying and selling different currencies. So the market's moving at different times for different reasons. But if we know fundamentally which currency is strong, which currency is weak, it means pullbacks can be very high conviction places for us to enter our trades. So that, again, is tomorrow. It takes time. You've got to keep practicing and practicing and practicing, and then you'll start to identify these things for yourself, and you'll start to be you'll have increased the chances of yourself becoming and maintaining and staying a successful trader, and you can then apply the technicals to the fundamentals. Okay, guys, that will be tomorrow. I hope that that's all clear. The Federal Reserve obviously is the big event this week. That's the one you really don't want to miss. It's on the Wednesday, and that is really going to be moving the US dollar, especially if there's a fresh direction from the Federal Reserve, either dovish or hawkish. It's going to make that difference. Guys, thank you very much for listening. I hope that that's been beneficial and helpful to you. Thanks, Nadir. Thanks, Sammy. Van, nice to have you regular guys here. Welcome, Hashik, too. I hope you've had a good session, and I look forward to being in touch with you guys soon. Take care and have a good session. Thank you.